Hey everybody, welcome back. Sive is here with the forexpeacearmy.com. Now let's have a look on the gold. So yesterday when we talked about the gold, we said, well, it seems that the crowd not very friendly for taking long positions immediately. Besides, for us, as deeper market will drop, as this is better until it stands above these lows. Because we have big pattern on the weekly chart, so just taking out of the top, and as closer we will take position to the bottom, as better result we will get. So these two factors told us yesterday to stay aside for a while and see what will happen. Currently, based on the sentiment that we see on the market, well, it seems that investors are starting thinking that conflict will be either slow and well, with a low intensivity, will fade out gradually, if even it will be extended in time, or it actually is going to the end. Just because, take a look what's going on. Yields has jumped on United States bond market, gold dropped, all other markets have dropped, and dollar is not dropping. So that's could say that investors are partially pricing out the probability of the escalation. We actually think that we have to be a bit more careful with this judgment. We're not sure that this definitely will be so. We'll share with our view in the Telegram. In towards speaking, both at the Western coalition as the Iran have their own critical military factors. For Iran, this is launching platforms from which there's launching the missiles. They have really huge reserve of the missiles, but if you do not have the platforms, no matter how much as missiles do you have, it will not help you. So the dropping of the intensivity of the bombing enemy facilities by the Iran, it's will keep it closer to defeat, especially if they are starting some way of the ground operation. But the Western allies also have the weakness factor. This is anti-missile defense system and the reserve of the anti-missile rockets that they have actually mostly exhausted. As weaker anti-missile system will be, as easier for Iran will be to achieve the targets and make the unacceptable damage to the coalition, especially Israel. So this is actually the confrontation of the unhousing of these two factors. And by some reasons, I think that it will be really fast and short term. It probably will be more extended. Besides, Iran right now is actually caught in the corner. They do not have any space to retreat. They will stand until the final point. This last outpost for Iran. So no chances. So from that standpoint of view, I wouldn't make any conclusions that, well, it's going to end very soon. Okay, now what we have on the technical side. You could see that gold has dropped recently, which is actually good to us. And here we have the bullish grabber on the spot gold. Potentially, well, it seems really nice because we're searching chance to take long position with the possible continuation, and appearing of the grabber here, it's very welcome for that purpose. But at the same time, with this grabber, we have a few tricky moments. First of all, you do not see it on the futures chart. If you take a look at the futures, you could see the market has closed below the MACD. So here we do not have a grabber, or better to say, we do not have the grabber on the April futures and on continuous futures. If you take a look at the March, which is additional, not major month for the COMEX gold futures, on the March, you will see that we have the grabber. So, other words speaking, the situation with the grabber is not only one-sided, it's not very clear. And that's why in the current circumstances, we probably better need to get a bit more confirmation of the possible reversal. Although I wouldn't deny that current placement around 50 even, it's technically a good point for possible long entry. It is rather strong support. We have potential grabber, or at least at some charts. So overall technical background shows that it's a nice support area, but still it would be better to get more confirmation. Another reason why it's might be a bit more extended downward action, just because market is not at the oversold here compared to the euro. And if you take a look at the 4 time frame chart, you could see that market has formed bearish reversal swing. So we have downside swing with some acceleration, and it's more extended than the previous upward swing. That's why I wouldn't be surprised too much if we'll get here some bit more attempt to move higher. I wouldn't say that it will be some straightforward downside breakout to the 47, 48 area, but if we based our suggestion on ultimate butterfly target, so first target has been reached here, it's confluence area, but market also has a confluence with the 49, 46, 50, 28 area. So from that standpoint of view, market could try to reach 1618 extension as well, which is around 49, 48, 92. So more extended downward action might happen. I'm not definitely telling that it's 100% will happen, but when the market is breaking important upside tendency, forming reversal swing, as a rule, chances on the second leg here increasing. Besides, you can see market has dropped here below the 51, although now is trying to move back, but this is just a retracement of this drop, so potentially it could move slightly lower. That with these things in mind, I think that you have to make some or take some compromises. First of all, if you still would like to make the bet and take position on this grabber, your task will be to buy as close to the lows as possible. So you do not risk too much in the case if we will be right and market will show another leg down. So your loss should be very small and it's not sensible to your assets. That's the thing that probably you have to do if you would like to deal with this. Second, our general scenario still suggests to get some reversal pattern around that will confirm that market indeed is tending to continue upward action with the major weekly grabber. That's our base case scenario. So for example, on the 30-minute chart, what we have currently, I do not see that we have really great upward performance. It is not really very fast. It's relatively slow, gradual, and that's probably not enough to make conclusion that we're not in just a retracement, but started of the upward continuation. Probably not yet. So we need to see what will happen next. Market has reached just minor COP target, moving lower. The one pattern that potentially might be considered, for instance, is just one of the possible scenarios. If we'll get the OP here, it might be a bit, well, maybe not perfect, but some at least kind of the head and shoulders. In this case, we could think about the position taking around 50.80, 50.85, somewhere in this area where the bottom of the right arm will stand. That also might let us to stand relatively close to the grabber and validation point. So this at least will be more reasonable risk in the current circumstances, when we will have at least the pattern on the back and a relatively good entry opportunity. But for now, at this point, well, I'm not really very kinetic with things that I see and not ready to go long immediately. So by my view, this is not enough context for making a decision. So probably it makes sense to wait and see what will happen.